This is East Asia Tonight.
Good evening, I'm Grace Shin, and tonight's top stories from East Asia. China expels former Politburo member Ma Xingrui from the ruling Communist Party over corruption allegations, the latest senior figure to fall in President Xi Jinping's anti-graft drive. And Typhoon Bavi leaves a trail of flooding and destruction in China as North Korea prepares for impact. Fresh U.S.-Iran strikes spark new fears of escalation in the Mideast. China calls for restraint as Washington prepares tougher maritime measures, including a 20% levy on Hormuz cargo. Chinese exports top expectations buoyed by orders for chips and automobiles. But slack demand in the showroom add to worries over consumer spending. Also tonight, Europe wants to break its dependence on foreign technology, but can it effectively build digital and infrastructure sovereignty without upsetting the superpowers? A hit movie that's literally moving people. Teochew dialect film Dear You is driving an uptick in heritage travel from Singapore back to ancestral hometowns in China. China has expelled another high-ranking official from the ruling Communist Party as part of President Xi Jinping's long-running crackdown on corruption. Former Politburo member Ma Xingrui is the third sitting member of the elite decision-making body to be purged since the year of 2025. 66-year-old Ma was placed under investigation in the month of April over what's described as serious violation of law and discipline, seen as the party's code for corruption. Investigators found Ma had sought extensive benefits for himself and his family, whether it's buying property at below-market prices, improperly arranging jobs for others, or receiving sexual favors. And the report also says he failed to detect other disciplinary violations, implying that more people are involved. Ma, a scientist-turned-administrator, enjoyed a meteoric rise after working for more than a decade in China's state-owned aerospace industry. The other two Politburo members removed over the last 2 years are Zhang Yuxia, the military's most senior general, and He Weidong, former vice chair of the Central Military Commission. Earlier, I spoke with Chung Jia-yen, associate professor of political science at the National University of Singapore and a non-resident scholar at Carnegie, China. He tells us what Ma Xingrui's expulsion reveals about Xi Jinping's anti-corruption campaign. Ma Xingrui's expulsion was widely expected, but beyond his individual case, what does it tell us about the current stage of Xi Jinping's anti-corruption campaign?
So there are a couple of things Ma Xingrui's expulsion tells us. One is that Xi Jinping's current anti-corruption campaign is continuing. It appears that there are corrupt officials at every corner, despite the fact that Xi has been trying to clean house for over the past decade and a half. Now, the other point I think that comes up is that no one is safe, right? We actually don't have any independent corroboration of what Ma Xingrui did or did not do. So it appears that it's possible for anyone to get purged at any point.
The readout also mentioned that Ma continued his misconduct even after Xi Jinping launched the anti-corruption campaign back in 2012. Why do you think that detail is significant, and what message is the party trying to send?
So I suppose the party is trying to signal that for individuals who might want to be corrupt or perhaps stray from party discipline. They had been warned. They'd been warned when Xi came to office, but they have continued to behave as if it was business as usual, and that under Xi, the party will go after these individuals, and that no one is too powerful or too high position or too big for the party to want to take down. And it doesn't matter how long they've been with the party and what they've done.
And I think the million-dollar question is why he's doing all this. The campaign has also reached the PLA's top ranks, even as Xi continues promoting some officers into generals. Now, what does that tell us about the state of the military and also Xi Jinping's efforts to maintain control?
So if it is true that there's corruption at the top levels of the military, I mean, the people that she has purged were individuals that he had handpicked, right? It would appear that either there are no good individuals out there, or despite Xi's best efforts, the military still is faced with, endemic corruption. Now, I would also have to stress that Xi's efforts to remove people from the party aren't just the military, aren't just, Politburo members here and there. They also reach deep into the economic economic bureaucracy of the PRC. So it's pretty comprehensive. Now, that would suggest then that, the PRC and the CCP either have a very serious problem with corruption, or she is really trying to go after political rivals. And you asked what this means for the PLA. At the minimum, what it means is that with the removal of senior officers, especially those with some operational experience, that would create a degree of tumult, that might create a degree of operational gaps, but it's not possible to know fully from outside. The PRC remains a very opaque system. So too with the CCP, the Chinese Communist Party.
Right. So by the looks of it, many details are still shrouded. So it's hard for us to really interpret whether this campaign is working. But from a macro point of view, has the anti-corruption campaign had any impact on governance? And has it made officials more accountable, or has it also made them more risk averse amid the cautious about decision making?
So from all reports, it seems that officials in their outward-facing capacity seem a lot more reserved. It would also suggest that because that it's unclear why people exactly get in trouble, officials have become far more risk averse and far more willing to wait for what the directives at the top say. So in that sense, the system has perhaps become a little bit more controlled, but it has lost potentially some flexibility in that regard. Now, at the same time, I think the fact that she keeps on going after corruption, that still raises questions about how far these efforts need to go, or how far she is willing to go in order to sort of, repair and reform the party in the way that he wants.
And Professor, last question to you. Let's look ahead to next year's party congress and leadership reshuffle. What role do you expect the anti-corruption campaign to play? Should we expect more high-profile investigations coming forward?
I wouldn't rule out more high-profile investigations and purges. That seems to be the way that individuals who might have become prominent or were prominent at one point in time were removed. And that is likely to be a continued pattern as we go into the next party congress. Now, of course, what people will also be looking out for is who she brings up in the sort of vacuum that he's created. That having been said, a lot of these individuals who've recently been purged were also individuals that she brought up. So there remains a degree of volatility and uncertainty, even as we head toward the party congress. Of course, this raises further questions about party continuity and leadership renewal beyond Xi.
And separately, China has also launched a corruption investigation into the top mine safety official in Shanxi, nearly 2 months after a coal mine gas explosion killed 82 workers. Hu Haijun, who heads the Shanxi Bureau of the National Mine Safety Administration, is suspected of serious violations of discipline and law. Details of the allegations were not disclosed, but Mr. Hu is the most senior official caught up in the widening probe linked to the disaster. The blast triggered a blanket safety inspection of coal mines across Shanxi. China has tightened mine safety rules over the past 2 decades, but major accidents expose persistent enforcement failures in some coal-producing regions. More than 360,000 people have been evacuated in northeastern China after Tropical Storm Bavi brought severe flooding to Liaoning province. Schools and kindergartens across the province are closed, and tourist sites have been shut, and some public transport services remain suspended. 9 provincial rivers have exceeded warning levels, while 43 reservoirs have risen beyond their flood control limit. Provincial capital Shenyang remains under its highest urban flood emergency response. And Bavi has made landfall in eastern China on Saturday, but has retained much of its structure and moisture as it moves north towards the Korean peninsula. North Korea is now warning of heavy rain and strong winds, with the storm expected to weaken before crossing central parts of the country between today and tomorrow. Leader Kim Jong-un has urged officials and workers to maintain what he calls maximum vigilance and take steps to minimize damage. Some southern areas could also receive up to 200 millimeters of rain, while strong winds are forecast along the west coast. Natural disasters tend to have an outsized impact on the isolated country because of its weak infrastructure and economy. Catastrophic flooding struck North Korea back in July of 2024, with South Korean media reporting that up to 1,500 people may have been dead or missing. Pyongyang rejected those estimates at the time. We'll head out for a short break, but coming up on East Asia tonight, record car exports driving China's trade boom, but they're also feeling friction with key trading partners. And later, NVIDIA reportedly slashes the number of Asian customers allowed to buy its AI chips after tightening compliance checks to prevent the technology from reaching China. Welcome back to East Asia Tonight. It's now time for your business news with Roland Lim. Roland, we saw better than expected export data out of China today, right?
Yes, Grace. Export growth exceeded market expectations again last month, but officials warning global inflationary pressures and geopolitical conflicts may put pressure on China's trade in the latter half of the year. China benefited from the global AI infrastructure boom as well as the strength of its auto industry, deepening producers' reliance on overseas buyers. Chinese exports in US dollar terms rose 27% on year last month, marking its fastest pace of growth since October of 2021. Overseas shipments accelerated sharply from the 19.4% growth recorded in May. Imports also exceeded forecasts, rising 36% from a year ago. That's the strongest gain since June of 2021. Exports to the US rose nearly 14% on year to $43.5 billion US dollars. Now, this widened China's trade surplus with the US to nearly $30 billion. At the same time, the overall trade surplus swelled to $125.6 billion. Now, experts say this could heighten tensions with partners such as the EU. Beyond AI-related goods, China's car exports jumped 71.2% from a year ago to a record 1 million vehicles in the month of June. And that keeps the country on track to export more than 10 million vehicles this year, up from 7.1 million back in 2025. Chinese EV makers are also gaining ground overseas, capturing more than 15% of the European market for the first time earlier this year, as high oil prices boosted demand, as domestic sales slow sharply following the phase-out of EV subsidies and a decline in demand for fuel-powered cars. The global AI investment boom has continued to fuel demand for semiconductors, servers, and other technology products. Still, Beijing is grappling with weak consumer spending, subdued private investment, and a prolonged property downturn, leaving the country increasingly reliant on external demand. Trade figures will serve as an early indication of China's second quarter GDP, which is due to be released tomorrow. Now, total trade is more than 30% of the country's GDP. Economists expect economic growth in the second quarter to slow to 4.5% from the 5% in the first quarter. To dive deeper into the details, Louis Liu, head of Asia Economics at Oxford Economics, joins us live from Singapore. Louis, good to have you on the show. Now, China expected to report growth of around 4.5% this week, but with retail sales and investment both weakening, how much faith should we be putting into that headline number?
Well, the headline numbers is assuring, I think, to policymakers. But if you think about the health of the economy, this is really the kind of unbalanced economy that, it doesn't really speak to a lot of durability, a lot of longevity, a lot of growth sustainability, a lot of those things that we look out for when we think about, China's growth model. And so I think, the numbers that will be coming out tomorrow that shows GDP, slowing from the Q1 pace, It is a slowdown, but even with that slowdown, I think people will be very much focused on what that retail sales number is. We're expecting a further contraction in June. And, potentially on the investment side, we're expecting investments to also weaken further in June as well. So all in all, I think this is going to be, a pretty weak set of data that's coming out tomorrow.
You mentioned the fixed asset investment number. That is down more than 4% this year. While heavily indebted local governments also have little room to spend today, has China, do you think, lost one of its main engines of growth?
Well, I think, it's funny how people talk about China being investment-led driven for so many years, and now we have investment contracting, pretty much over the last few months. I do think that, a big part of that investment decline has got to do with the fact that the economy continues to work through a lot of the balance sheet repair, work through a lot of the debt, not just at the local government levels, but also property developers. So there is a lot of debt that needs to be worked through. And that, by most other economies' example and history suggests that it would take, at least half a decade. So we're still pretty long way to go before investments could, stage a very organic rebound. So I think you're right in that, China might have lost one of its engines of growth, but, again, today's trade number does suggest that it has found a new engine of growth in exports, although that is obviously a very fragile picture to be leaning or putting all your eggs on in the same basket.
And retail sales is another data point that you are also closely scrutinizing. It fell in May for the first time since 22. Car sales weakened as soon as those subsidies had faded from the markets. So is this a temporary pause, or are Chinese consumers genuinely pulling back from spending permanently, do you think?
Well, permanently is a big word. I think if you look at the trend over the last few, I would say since the economy reopened in 2023, it does suggest that the underlying momentum is much weaker. And so we should be prepared for a consumer, for a household sector that has really readjusted to spending less than they used to before the pandemic. So that softening is potentially permanent, as you said. But I do think that, because of that, we are now in a very crucial window where there is a lot of upside to be had if governments are more proactive about supporting the households, right? Confidence is still quite low. And traditionally, when we see other economies, when confidence is low, there's a lot more that governments can do to turn that around. So I think there's a big role for fiscal policy to play here in turning around that retail sales numbers, that household consumption number.
Louise, the jobless rate also has barely moved, but as you mentioned, household income growth, that's cooling, and Beijing has since dropped its numerical jobs target. What is the headline unemployment figure not telling us?
Well, it's not telling us the fact that so when we think about the seemingly unmovable unemployment numbers in China, these are the surveyed numbers. These are the urban surveyed numbers. So it's not really representative of the whole population. And certainly, for a subset of the population where they may have left the urban labor force, gone back to the rural countryside, those are not counted. So potentially that number, that 5.2, 5.3% that we've had for so many months, that could be understating the real story here. But beyond the number of people who are in the labor force, who have had jobs, who are potentially underemployed, you also have the problem of those being in jobs having low wage growth, right? Which is what you mentioned. So they're not getting paid as much as maybe they used to before the pandemic. And this creates a kind of circular vicious cycle where people who are worried about job prospects, who are worried about income prospects, they tend to pull back on spending, right? So it kind of leads to this virtuous, a vicious cycle where people are less certain about the future, they spend less, therefore, the economy doesn't do as well, and then that perpetuates the kind of weak growth outlook. So I think this type of momentum needs to really be addressed, I think, as soon as possible by very proactive policies, as we mentioned earlier on.
And as you mentioned, consumers are also spending less. Factories still running hotter than consumers can spend. Chinese simply making more than they have for their own economy. Can the world even absorb the rest? Very quickly.
Well, I think Yeah, it's well, there is no yes or no answer, but there's certainly a lot of political pressure coming out of the EU. The automobiles data suggests that there is still a lot more appetite, a lot more demand out there. But I think, how sustainable it will be is one, the jury is not out there on that yet.
Louise, appreciate those analyses. That was Louise Liu, Head of Asia Economics at Oxford Economics, speaking to us from Singapore. The Chinese yuan holding steady near a 3-week high following those latest trade numbers. Now, stocks in Shanghai, Shenzhen in the green. After earlier dips in Hong Kong, those shares were recouping losses, while tech stocks tracking declines seen elsewhere in Asia. Meantime, China's leading memory chip maker, Zhangxin Memory Technologies, is set to list on the Shanghai Stock Exchange. Reuters, citing sources, say the listing is scheduled for the 27th of July. Now, if confirmed, this would be Asia's largest IPO so far this year and China's biggest semiconductor listing since 2020. The company will begin book building tomorrow, seeking to raise $4.35 billion. CXMT is the world's 4th largest DRAM chip maker, with an estimated 7.7% market share last year. Analysts say strong demand for AI chips should help absorb the large share sale, despite growing volatility in the global memory chip stocks. China's smartphone market shrank again in the second quarter, with shipments falling 4.3% to 66 million units. That's according to research firm IDC. Buyers are refraining from upgrading amid higher prices driven by rising memory and component costs. Still, Huawei and Apple managing to buck the trend, posting shipments growth of nearly 20% and 24% respectively. Both kept prices steady while rivals raised theirs. Huawei leading the market, with Xiaomi, Oppo, and Vivo all reporting declines. NVIDIA has reportedly slashed the number of Asian customers allowed to buy its AI chips after introducing a stricter whitelist system. The Financial Times says more than half of its previous customers, particularly neo-cloud providers in Singapore, Malaysia, and Japan, failed tougher compliance checks aimed at preventing the chips from reaching China. The move comes as Washington tightens export controls on advanced AI tech, with NVIDIA now reportedly conducting on-site inspections, contract checks, as well as end-user interviews. A Taiwanese chip-making titan TSMC expected to notch another quarter of record earnings when it releases results this Thursday. Analysts expect the NVIDIA and Apple supply to report net profits of more than $19 billion, which would make it the 5th straight quarter of record earnings. The chipmaker reported its June revenue yesterday. That's up almost 68% on year at $13.8 billion, bringing its second quarter revenue of just under $40 billion, up 36% on year. TSMC shares ending the day in the red, down 0.8%, faring better than the Taiwan weighted index, down 1.4%, weighed down by losses in the electronic tech sector. And I'll be back with more business news later on in this hour. For now, it's back to you, Grace.
Looking forward to that. Thank you. In the meantime, now we'll head out for a short break. But coming up on East Asia tonight, China deeply concerned about renewed fighting in the Middle East. How will countries in East Asia respond to the proposed U.S. tolls for ships in the Strait of Hormuz? Well, we'll ask an expert right after the break. Hello again, this is East Asia Tonight, and here are the headlines we're following. China expels former Politburo member Ma Xingrui from the ruling Communist Party over corruption allegations, the latest senior figure to fall in President Xi Jinping's anti-graft drive. Tropical storm Bavi leaves a trail of flooding and destruction in China as North Korea braces for its landfall. Plus, fresh U.S.-Iran strikes prompt calls for restraint as Washington prepares tougher maritime measures, including a levy on Hormuz cargo. Picking up on that story, China says it is deeply concerned about the resumption of military conflict in the Gulf region as Iran launched fresh strikes on its neighbors. Now, this all comes as the U.S. launched another night of strikes on Iran, just hours after President Donald Trump said Washington is reinstating a blockade on Iranian ports in the Strait of Hormuz. Beijing has called for de-escalation.
保持理性克制，维护来之不易的停火局面，防止战火重燃，更不应让战事扩大，伤及无辜。尊重霍尔木兹海峡沿岸国合法权益，尽早恢复海峡正常安全通行，是国际社会的共同愿望。相关各方应相向而行，妥善处理。中方愿继续秉持习近平主席4点主张精神，为推动中东海湾局势降温趋稳做出不懈努力。
The U.S. blockade resumes tomorrow at 4 a.m. Singapore-Hong Kong time. Iranian ships and anyone buying Tehran's oil will be prevented from entering or even leaving the waterway. This comes as Mr. Trump, in a dramatic escalation, said all other ships will face a 20% levy on their cargo in return for the U.S. providing safe passage. And the White House had previously insisted there could be no tolls on international waterways.
Yeah, I want to be reimbursed because we're protecting a very rich portion of the world. We're spending money. And so what we've done is we are going to be reimbursed for protection.
Iran's Foreign Minister Abbas Araghchi has hit back, saying his country has always been the guardian of the strait and will remain so permanently. He also hinted at a better deal on ship toll charges, promising to be fair. To help us break down the details, we're joined by Simon Frankel-Pratt, Senior Political Science Lecturer at the University of Melbourne. Simon, President Trump saying a lot of things there. The U.S. reinstating a blockade on Iranian ports and even imposing 20% tolls on commercial shipping through the Strait of Hormuz. Now, do you think this is primarily a negotiating tactic, or does it represent a fundamental shift in the U.S.'s strategy towards Iran?
I think it is neither a negotiating tactic nor a long-term shift in policy. The pattern, I think, has been a lot of sort of hopping around and impulsive declarations by President Trump as he sees that the U.S. is unable to truly coerce or force the sort of settlement that it's seeking here vis-a-vis Iran and control over the Strait of Hormuz. I think it's unlikely in the longer term that the U.S. is in a position to collect a 20% toll on ships passing through. And in any case, that is a fairly astronomical number that brings to mind Caribbean piracy or something, and it would massively increase the cost of energy throughout much of the world. So I don't think that's a long-term solution to anything. But it's also not clear to me that this offers any sort of negotiating leverage. And so if it is a tactic, it's not one that I understand, and I'm not inclined to view it as such, if I can be honest.
Right. Then how can we read into Washington's proposal? I mean, by the looks of it, is it realistic?
It is not realistic in my view. I'm not sure how it would be implemented seriously. And I suggest that if you wait, it will just disappear.
All right. Now, let's narrow our angle to East Asia. China, Japan, and South Korea all heavily rely on energy imports through the Strait of Hormuz like many other countries. But how differently are they likely to respond given their different strategic relationships with both Washington and Tehran?
This is a great question because this is one of these rare situations in which I think that China, South Korea, and Japan have a relative harmony of interests. All three countries depend very heavily on free and moving access to energy supplies that flow through the Strait of Hormuz. So all three countries, despite being adversaries in other arenas, have a strong interest in shipping resuming and resuming at a low cost. It is true that China perhaps has access to the waterway, maybe a little better than Japan and South Korea because Iran and China have relatively cordial relations. But all three countries would like to bring this to an end. And whether this harmony of interest lasts very long or extends elsewhere is, unclear to me. But in this case, pretty much all of Asia I think, is unified in their interest at getting the strait open and free and safe.
Especially since it is a critical waterway for most of the world. Also, I'd like to talk about how this conflict, it has been ongoing for months now, and compared with the start of the war, do you think countries like China, Japan, and South Korea are better prepared for such prolonged disruption?
I think that this is sort of a global wake-up call as to the geopolitical risks and economic risks of over-reliance on petro. And I think China is in a great position to increasingly shift toward green energy. And I think that Japan and South Korea are increasingly incentivized to follow suit. That's not a short-term solution, but I think that the winds are shifting increasingly, well, so to speak, no pun intended, as a result of this particular crisis. I do think that as time goes on and as shipping remains uncertain and cargo increasingly expensive, we'll see increasing economic pressure on Asian countries and Asian markets.
Definitely a wake-up call. And have we since seen governments and businesses in East Asia start changing the way they deal with energy shipping or supply chain when it comes to strategies? Or do we need to see a new direction coming about?
I'm afraid my expertise does not extend to Asian market responses. As interesting a question as this is, I'm a little more focused on Middle Eastern geopolitics, I'm afraid.
Okay, then let's focus there right on to the energy security and geopolitics. If we are to see prolonged disruption yet again, what do East Asian governments need to do differently?
Well, I think we'd like to see in general, I'd certainly like to see a shift away from the kind of kangaroo market response that we've seen in the aftermath of every confident declaration by the US that some solution is in front of us, followed by a market dip as that solution appears to vanish or evanesce into the fantasy it was all along. I think that Asian investors in Asian markets should ideally respond with greater lucidity and foresight and not respond to every sort of apparent shift, and instead keep their eye on hedging, on medium-term solutions, and again on looking for energy solutions that are not so dependent on petro supplies flowing through the strait.
How realistic do you think that is, though, given geopolitical situation right now?
I don't think it's a short-term option for the world. And I think that so long as this continues and it shows no indication of stopping, all of us are in for some pain. And there's no way around that, and no wishful thinking can get us away from it.
So it's now time to face reality and find plausible solutions. Thank you so much for your insight. That was Simon Frankel-Pratt, Senior Political Science Lecturer at the University of Melbourne. And for years, the EU has been a leader in tech regulation. Now, in the race for global tech dominance, the bloc wants to build up European digital capabilities and infrastructure, an ambition that could set it on a collision course with the US and China. William Denslow filed this report for CNA from Brussels.
What I've done is to innovate in the complete opposite direction.
Sending a message to the world by bringing the social back to social media. WSocial is a new European tech company that's built a platform emphasising interaction among humans, not AI chatbots. And it aims to take on US giants like X and Blue Sky.
We are giving away the revenue. We are giving away our data. We are giving away our attention.
The company announced its beta launch last month here in Brussels. What makes W unique is its strict approach to age and identity verification, and it aims to host all user data on European servers under EU privacy laws. W's launch comes amid increasing momentum for the EU to regain control over its digital infrastructure and capabilities, and inject its values in the tech domain. And its founders have called on the bloc to do more to help innovative startups succeed.
The European Union have been lagging behind. You also need to help companies to succeed. You can't only regulate them. If we don't step up, all our innovations are going outside to other places.
Roughly 80% of Europe's digital services and infrastructure comes from outside the bloc, most of it from the US and China. Member of the European Parliament, Michał Kobosko, calls this a wake-up call for the EU in a world where tech dominance is a form of political power.
IT solutions can be used as a tool, if not a weapon, in our weaponized world, where more and more IT solutions are being used to show your power, to show your superiority, and to show that you can do much more than the others.
Recent trade spats with China and the US have highlighted EU vulnerabilities and underscored its need to change the status quo. EU officials say they are committed to strengthening competitiveness and reducing dependencies. To help achieve that, the European Commission has adopted the Tech Sovereignty Package, a series of measures designed to boost Europe's digital autonomy. Under the plan, the EU seeks to build up its AI infrastructure, expand cloud computing capabilities, and turbocharge its semiconductor sector. It also wants to build resilience by diversifying its trade.
The future for the EU is going to be finding other partners, which is also why the tech sovereignty package defines tech sovereignty not as isolation and protectionism, but as openness also to others who share similar standards.
A priority for Europe is to wean itself off Chinese tech in sensitive sectors. It's a move that risks upsetting one of the world's largest trade relationships, and Beijing has threatened retaliation. Though for now, talks between the sides are keeping a lid on things. Michał Kobosko says it's a balancing act, with the bloc still heavily reliant on Chinese rare earth exports.
We need to have an access. We need to make sure that we have this access today, and this access will be kept tomorrow, and that China will not be introducing, another form of the export bans on export of these critical materials.
The EU must tread cautiously with the US, whose president has threatened tariffs on any European nation that imposes a digital services tax.
Would you like to take a fun little quiz?
Europe may have bold ambitions, but it's learning that in the race for global tech dominance, victory will require a delicate approach. For CNA, I'm William Denslow in Brussels.
And we'll head out for a short break, but coming up on East Asia Tonight, leveraged bets on South Korea's chip stocks are unraveling, exposing retail investors to mounting losses. We'll delve into why the sell-off is putting high-risk investment products under pressure. Welcome back. As we promised, Roland Lim is back with more business news as East Asian equities are hitting multi-week lows today. Right, Roland?
Right, you are, Grace. Yes. East Asian markets totally volatile today. The KOSPI slumping to an 11-week low. Taiwan shares having its worst day in more than a month. Now, Asian investors still questioning if the AI boom has to run very far, or rather has far to run. Even as the benchmark KOSPI and heavyweight Samsung and SK Hynix staged a rebound after a bruising sell-off the previous day. KOSPI ending the day up 0.73%. Samsung and SK Hynix closing with gains of more than 3%. Now, SK Hynix, though, suffered its biggest ever one-day drop yesterday, and that also triggered a chip sell-off on Wall Street. SK Hynix shares in New York were also lower by more than 9% overnight, reversing course just one trading day after its blockbuster Nasdaq debut. The latest decline marks a mood shift around AI stocks. Just weeks ago, SK Hynix became one of the world's trillion-dollar companies as investors piled into AI memory plays. Now its market value stands at about $875 billion. Now, peer Samsung has also fallen below that milestone. The focus now for investors is to gauge whether the weakness remains contained or spreads across Asia's AI chip stocks. But the South Korean government remains optimistic. Robust demand for AI chips can keep its economy on a stronger growth path. The government raised its growth forecast for the year to 3% from 2% previously, counting on surging AI demand to offset the drag from the Middle East conflict. The chip sector remained in focus in both Tokyo and Seoul as investors reassessed the AI rally. Japanese shares struggled for direction earlier, but reversed course, supported by bargain buying and tailwind from the tech heavyweight South Korean market. SoftBank Group's CEO brushing off concerns over the AI boom as tech stocks continue to decline amid shaky investor sentiment. Masayoshi Son says that any talk of a bubble forming around the tech sector is absurd. Now, Mr. Son says the development of AI would require annual investments of $5 trillion by 2040, doubling down on his bullish outlook for the sector and dismissing concerns about an AI bubble. He also forecast data center power demand would reach 3 terawatts by then. That's around 1.8 times current global electricity consumption. However, Mr. Son did not share how he reached those figures.
And South Korea's benchmark KOSPI stock index has gone from a record high to a bear market just in the space of weeks. Much of the swing is being driven not by the chip makers themselves, but by the leveraged ETFs, short for exchange traded funds, built on top of them. And Roland Lim is next to me to help us break down the details. So Roland, Asia's AI rally has delivered extraordinary gains for quite a while now, but it's also left major indices dependent on a handful of chip makers, right?
You are right. I mean, yes, the story is not about weak chip earnings, I should say. It's about concentration. It's about leverage. What I mean by concentration is that both Samsung Electronics and SK Hynix together, their market cap is now more than 50% of the KOSPI benchmark. Now, that's quite a huge weighting. Leverage because the biggest leverage product, that's the leverage SK Hynix ETF, that's down 45% since its launch.
Right, 50% of KOSPI, that's a big wow there. And aren't ETFs normally seen as a simple way for retail investors to diversify their portfolio? What's different there?
Yeah, so these are not your conventional ETFs where you take a bunch of stocks and then you sell it to investors, retail investors. Say, for example, you want exposure in bank stocks. Now, these are leveraged single stock ETFs. So specifically, the SK Hynix ETF, that is actually pegged on to the stock, and it promises to have twice the return of the stock itself. But the trouble with the ETF that it's reset every single day. So if there are losses and the stock actually falls back to about its same price the next day, the ETF doesn't do that. I'll give you a very simple example. Say SK Hynix was $100. So on Monday, the stock went up 10%. So the stock goes up 10%. The ETF goes up 20%. So there's $120 it becomes. The next day, the stock falls 10%. Now, the ETF would fall 20%. So $120, 20% of that means that the stock is currently now $96. But the stock did only fall 20% or 10% the next day. So we're talking about only $12 on the stock itself. So you're comparing $108, the stock, but ETF, it's fallen $96. So that's why ETFs should not be traded, should only be for traders themselves to use rather than for retail investors to hold on the long-term basis.
Right, because it seems much more complicated. I mean, the better the gain, it seems like double, but then there's much more complications to that. But then what does that do to the underlying shares?
Yeah, I mean, so it's basically creating a feedback loop of sorts. The boom-bust cycles becomes more amplified. So, for example, take the example I gave that the stock starts to fall, then the leverage fund will then have to cut its losses on the stock itself. And then, that means that adds further pressure for the stock and the fund itself to actually slide further. So that's what's been happening. In fact, Bloomberg just reported that the two chip makers stocks alone, plus their leveraged ETFs, they currently make up to 70% of the trading value on the Korean exchange. So that's stunning. And let's hear what one analyst had to say.
이렇게 변동성이 커지는 거는 다른 거 없습니다. 수급이 한쪽으로만 쏠려 있기 때문에 나타난 현상이에요. 거기다가 이 수급의 쏠림이 나타난 그 종목군들이 결국 지수를 결정하는 두 종목. 그러니까 SK 하이닉스하고 삼성전자가 두 종목 그 우선주가에 합치면 60%가 넘죠.
Then leave us with the final warning for retail investors.
Yeah. So, as I mentioned earlier, don't confuse easy access with low risk. Leveraged ETFs should be suited towards traders themselves, not people who are not closely watching their portfolio. Heavy retail losses for these retailers means that they can't actually get back into the markets once these prices dip again to buy back in. So, shares like Samsung and SK Hynix may have to rely on foreign investors, may have to rely on institutional investors to bring those prices back up. And I should also mention that this goes beyond Korea because chip makers like TSMC, Samsung, SK Hynix, they are actually a major part of the MSCI Emerging Markets Index. So anyone who's actually bought that index fund thinking that they had exposure to emerging markets, actually, they also have a big bet on AI chip stocks.
All right, so anyone interested on going on this AI boom must pay attention. Thank you so much for helping us break down the details. That was Roland Lim joining me in the studio. Now, let's switch gears to a different story before we let you go. Some Singapore travel agencies say queries for some cities in China have risen at least 15% since Chinese film Dear You began airing here. And the movie, which predominantly has dialogue in Teochew, a Chinese dialect, has spurred interest in some Singaporeans looking to find out more about their ancestral roots. Nadine Yam with more.
A popular film about the migration of Teochew people from China to Southeast Asia. Now, many Chinese in Singapore are seeking to journey back to China. China Express Travel has received roughly 30% more queries since the movie began screening in Singapore in mid-June. A 6-day visit next month to the Chaoshan region, where the movie was filmed, is already fully booked. There are limited slots left for similar packages for the rest of the year.
我们在很早以前就说出来，就打出这样的广告来，就是叫一些潮汕人能够参加我们的那个团队，就是根据这个情况，我们就把它推出来了。
Another travel agency has launched heritage and homecoming journey packages inspired by the movie. The itinerary includes participating in Chaoshan cultural activities. Travelers can opt in for ancestral research as well, or even arrange to meet their relatives still living in China.
With DIU, we actually have a new itinerary. One of the very different experience I put in is actually bring them to experience writing a letter to grandma. It's not just about traveling, it actually acts as a reflection of oneself, deeper emotional bonding, also, of course, as a keepsake for their tour.
The agency is looking to work with clan associations and local historians in China to make these journeys more accurate and meaningful.
World Cup fever reaching its climax as the competition narrows down to the Final Four. The semifinals will see the top four in FIFA's world rankings face off against each other. World number one France takes on European champions Spain in Dallas in about 8 hours from now at 3 a.m. Singapore-Hong Kong time on Wednesday. And on Thursday, England faces defending champions Argentina in Atlanta at 3 a.m. Singapore-Hong Kong time. And you can catch those matches and get all your FIFA World Cup coverage with National Media Network Media Corp. Just go and subscribe to MeWatch and stream all the matches live. Plus, there are curated highlights of every game, also available on MeWatch and Media Corp Sports on YouTube, TikTok, and other digital platforms, as well as this channel. And that's all we have for this Tuesday's edition of East Asia Tonight. But don't forget headlines anytime at CNA.Asia. Plus, we're on Facebook and YouTube. Thanks for watching.